and we're hanging out on Google Hangout on Air today. I'm just looking to see if anybody else is going to be joining us, so please stay tuned. There you are.
Yes, can you see me?
I can.
There we go. Can you see me now?
Yep.
Let me adjust this accordingly. I was in a meeting, just got out, so.
Not a problem at all. We don't have anybody viewing with us. I was wondering if we were going to get any. But I thought we'd give it a practice. You're just showing us your nose to chin right now. There you go. Just so we get it just right. Okay.
You know, maybe I should go back to my other screen here to.
And I think I figured out how it says that I can hide other viewers if I get above 3+, if I get 3 or more viewers. So it means the first 2 control it, I believe. So there was no other way that I found it, but I thought we would just do another recording of this, and we can always edit this, so this is good.
No, I took in, I'm just getting things adjusted here.
You've got a very nice Mortgages Unlimited shirt there, I see.
Yeah, I should make sure I have.
Yep, have that in the picture. I got my little badge on. It's kind of shiny, but oh well.
Let me see here. I guess that's pretty good right there. I put together a slide for the FHA thing.
Yay!
Will I be able to share it, or will I have to send it to you?
I think you're totally able to share it. So why don't we just kind of make an introduction, and then I can edit the other part out for right now. But we'll just start with the introduction, and then I'll let you go first.
Okay. So before we do that, I should. Let me see here. Can I switch where the camera is located, or the picture on the bottom?
No, I don't think you can. Let me see. No, I can't move it at all. Is it right in a spot that you need, huh?
Well, not necessarily. I just got I moved the screens around. Let me try that again here. Just that if it's, I guess it's not so bad. It'd be nice if I'm staring right at the screen when it's like, I mean, I guess I could move it over to the smaller.
You know, I have the same problem. In order to really look at the camera, I have to look up here, and I never do. I just look at myself. So it's like I look at you in the screen and there, so I'm not looking up at the camera. It's not ideal, but don't worry about it. Oh, you're doing a house cleaning. Look at me. I have water bottles in the background. I'm the water bottle storage closet, I guess. So if Keith sees this back, he'll change that, I'm sure.
Let me just pull up, or I'm just going to put my, yep. Okay. So I think,
well, we'll give it a try. And I'm going to lock it into you in just a second. So only your video, so it doesn't flip back and forth when people watch it back. So I'll just go ahead and do an intro.
Okay. So when I'm sharing the screen, does it, then it only shows the screen until I unshare the screen. Then it goes back to me.
Right. Yeah.
Okay.
Should be all right. Okay. So we'll go with, welcome everybody to today's, oh, I got to start that over. Okay. Welcome everybody to today's Twin Cities Real Estate Unlimited show. Today is April 13th, and I'm Laurie Knudson with the MLS Online in Champlin. I'm a realtor. I've been in the business since 1992. With me on the broadcast is Brian Nelson with Mortgages Unlimited. And Brian, you are located out of Maple Grove today. I know you kind of travel around a bit. And we are using a new format today called Google Hangouts on Air. And so I am able to, as I'm talking, the screen will be pointing to me, but I'll go ahead and let Brian introduce himself and how long you've been in the business and stuff, Brian.
Well, my name is Brian Nelson, and I've been in the industry over 20 years in the mortgage industry. Enjoy it and love working in the mortgage industry. And I am, like you mentioned, headquartered in Maple Grove, Minnesota. And I am excited about our new format here with the Google Hangouts. So I'm excited to see how well it works. Yeah,
there's Google Hangouts, and that's just to go kind of like Skype. And then there's Google Hangouts on Air, and this is new for us. We usually do ours through GoToWebinar. So we're doing kind of a practice session today. We're hoping to get more viewership in the coming weeks. We thought we'd give it a try. What we're going to have this show be about each week is Brian and I will be sharing just a tidbit of information about the local market update. Being that we've both been in the business over 20 years, we feel like we have a really good handle, and we're both numbers people. We like to look at statistics to show the real market trends rather than just saying, well, this is how I think it is. We actually use the real data coming out of the North Star MLS, which is our regional MLS system, coming from the mortgage industry, local and national, as well as the National Association of Realtors. So with that, we're going to try to switch it over to Brian, and he's going to start with some mortgage information today.
Yes, I wanted to showcase a loan today, and the loan that we would be talking about would be an FHA loan. And I'm going to just share my screen here so you can all see that. And so it should be up in front of you now.
Yep, I do see it. It comes up real well, and I've got you zoned in as the speaker right now, so you have the floor.
All right. Well, FHA is one of the common loans as far as it's a government loan, stands for Federal Home Administration, and I've kind of highlighted the advantages and disadvantages of the loan. And probably one of the biggest advantages is the lower down payment. It only needs 3.5%. It also has a lower credit score requirement. We typically go down to about 620 on the credit scores. Okay. And it's typically easier to qualify than a conventional loan as far as the ratios and such. You can actually go a little higher in the ratios, and it's designed for more of the first-time home buyer program, the low down payment. There are also some, when you go to refinance it, you can do a streamlined refi, which makes it nice, which means no appraisal and sometimes no income even checking. And it's also assumable with qualification. So those are some nice features about it. And also it allows gifting.
Yeah, I was going to ask you to mention that, because I know I was talking to some clients about Minnesota housing money, and that's as low as $1,000 down, which is great, but you cannot be gifted, is my understanding. So FHA can be gifted. There's just got to be a letter or some kind of documentation showing that, correct?
That is correct. And another big advantage to FHA is the non-occupying co-borrowers, where you could have a parent go on, or somebody like that, a blood relative could go on the loan with you, your brother and aunt or whatever, and they don't have to occupy the house, but they could be on the loan and help you qualify to buy that home.
Well, that's fantastic. Okay, good.
It is, and a lot of times maybe a person doesn't make the income otherwise, or is kind of weak on the credit, and if they have a co-borrower, they can do it. And then the seventh thing I've listed there was it's usually about 0.5% lower on the interest rate, so that's kind of nice as well.
Mm-hmm.
Now, there are some drawbacks or disadvantages. The MI is a fixed factor. It's 0.85. Now, if you compared that to like a conventional loan, you're probably going to be at, if you've got good credit, you're going to be at like 0.62 or something like that.
Yep, let's explain to the viewers what MI is, though, because that's logo for you and I. But
MI is mortgage insurance, and it's anytime you put less than 20% down, it kind of covers or insures the mortgage company against default on that top 20% on the loan.
Mm-hmm.
So, another thing with that factor, if you jumped out to number 5, recently, about a year or two ago, FHA made MI to cover for the life of the loan. You no longer can drop it off at 20%. So that's a disadvantage with the FHA as well. But you know what? Nowadays you're not staying in the home as long usually, and so for you to hit that 20% mark isn't always going to happen right away. And so even if you had a conventional loan, you may not hit that mark until a number of years, and you might be on your way out upgrading that house at that time anyway. So
true.
And there's some other disadvantages. There's fewer loan options with the FHA that they mainly offer. There's not much. I guess they have some ARMs, but there's not quite as many options as conventional. And the lower loan limits, I think it's around, they used to be around 317, 320 for the minimum, or for the maximum for FHA is versus conventional. It's about 417 on the loan amount. Owner occupied only, and you can only have one loan. So those are some of the disadvantages. But usually if somebody's got a lower credit score, they're going to be looking at the FHA. One other important thing is, like, if somebody has a bankruptcy, it's only a 2-year wait on FHA versus 3 years on conventional.
Oh, okay.
If they have a foreclosure in their history, then it's only a 3-year wait on FHA versus up to 7 years on conventional. So all in all, the FHA is a nice program out there. There's a ton of those that people are doing. So it's a really good program for a first-time home buyer, and you can definitely get approved and into that program anytime. So
yeah, and there's a little bit more stringent FHA requirement on the appraisal side too. So the appraisers have to do a little bit more on their end for that. But the whole intention is to be able to give that first-time home buyer a chance to get into a home with a little less credit score and possibly a little bit less down, because they can get a gift and become one of those homeowners, and then also to kind of secure some of the items in the home to make sure that they've tested the dishwasher, tested some of those appliances. It's not really to be in place of a home inspection, and we still want to have one of those on the real estate side, but just letting them know there's a little bit more of an intense FHA appraisal in there as well, correct?
That's correct. They do look a little bit closer. There's some safety factors they look in. I'm going to pull that slide down, but so there are a few other things that are a little bit more picky on as far as the FHA, as far as the appraisal and the property. And not all properties, as Laurie, as you know, when you're looking at properties, they don't all qualify for FHA.
Right. Yeah, there's 2 points that we want to bring up regarding your lending. Is when you put a loan together, first you qualify the actual person or people that are getting the loan, and the second part of it is the property has to qualify, whatever kind of loan you're getting. So there's always 2 elements in that. There's smaller pieces, like it's got to be in the right zoning and all that kind of thing too, which we don't have to get into, but I'm glad you brought that up, because it's super important for people to understand. Just because they qualify for an FHA mortgage doesn't mean every property they look at is going to be a good fit. So we need to keep that in mind. Good. Well, I'm going to take a stab here at sharing my screen. We'll see how we do here. Let's see. I believe. I don't know if I've got the right one pulled up. Hang on one second while I have some fun here, I guess. All right. Let's see. I have some statistics brought up from the Minneapolis Board of Realtors. There it is. And are you able to see my screen okay, Brian?
Yes, I am. Yep.
Okay, so I'm going to lock it into just me so you can talk, but my screen will show. And what this is showing here is some statistics just about the Twin Cities area that are talking about monthly indicators or housing supply. So there's a couple different ones we can look at. We can look at a local market update. We can really drum down as realtors to get into a particular, if I clicked on like say Wright County, I can actually get into an actual city or area brought up. I guess right now they have Otsego brought up, and it'll give me some statistics brought up on just Otsego as of February. So it's a very local market update. It's a fantastic way to have us do a quick peek at the market if we were to come out and look at listing your home in Otsego, or if you were going to be a buyer in Otsego. So it's going to show us some things here in just a snapshot. And this is why you want to work with a realtor. This is why for sale by owners have a disadvantage. And buyers have an advantage in listing. People who list their home have an advantage when they work with an agent. We get to see, the different percentages of change that's going on. I always like the charts, and this is why I do look at numbers, as each and every area changes. It's never going to be the same between two towns. So this is specific data brought out of our MLS system. I'm going to pull another one here. I'm going to go to housing supply overview. I'm going to look at our most recent report, but just so you know, we could pull up, something from like even 2014 if we wanted to. And I'm going to look at the Twin Cities. So I'm going to view this report. And it shows us some quick facts here. We've been talking about how price range with the strongest sales is in this price range, $190,001 to $250,000. We oftentimes throw $220,000 out there as a nice average price range. And that is the overall median size sales price. So that's probably why we refer to that number quite often. But this has really seen a nice increase in the last 12 months here. So it's just talking about how the Twin Cities in general, of course I could narrow this down more, but for the 12-month period spreading between March and February of 2015 to 2016, and pending sales up 14.7% overall. So it's just got some verbiage in here, but the quick facts are listed here. That doesn't mean we've seen appreciation of 14.7%. That means we've seen 14.7% pending sales are up, which is nice.
Mm-hmm.
And of course, we have more pending sales because right now, here's some information about the pending. Pretty much any house that is listed between that 180,000 price range to 250 is going in a matter of a few days. That is our target market for multiple offers right now. We didn't know this was going to happen back in December. We had thought there would be more people putting their home on the market and competing, but basically there's not enough homes for sale in that price range. So they're just getting snapped up really, really quickly. And so we're seeing here some of the data on that. I like to look at the days on market until sale. So if you're under 120,000 price range, we're down. We're really down here. If you get into the higher price ranges, we're seeing more typical days on market. That is much more typical. That's normal for those price ranges. But these right here are just skimming the bottom. Here we have the 120 to 250,000, and it's just, there's not enough inventory on the market. That's clearly what this says. Inventory is the primary need that we need to work on. And so my message for the last several weeks has been, if you are considering selling your home at all, if you think you might do that in the next 6 months or even 12 months, you might want to consider doing it in the present condition that it is in now instead. And I'd be happy to email you, or if you want to give me a phone call as a customer out there, and I'd come out and pull the same information that's available for your specific area and show you just what your competition is. But we have just a terrible need right now, a critical need, I will even say, to get houses on the market to build supply. Right now, our inventory is just down way too far. And so with that, that's pretty much all we wanted to share today. We're keeping it as a very short broadcast. Typically, sometimes we get carried away into subjects and go about a half hour long, but right now we're just going to go with a shorter broadcast and deliver those two informative pieces to you as the Twin Cities market is seeing great interest rates with Brian as the loan officer expert here, and then great need for listings, especially in that one price range of 120,000 to 250.
Well, even over the last week, Laurie, there's quite a few people I've written pre-approval letters for. They've gone out and they just haven't. They didn't tell me, yep, there's 5, 6. One of them, they said there was 8 other offers, and they just can't find anything. And so they're going well above the list price, and I think
they are.
And so we've got to talk over these numbers ahead of time, make sure that they're comfortable in the payments. And some of these, it seems like the realtors are listing them a little bit lower than what they should be, just to grab all of that business. And then, because I'm sure it only takes 1 or 2 times of losing out in a multiple offer, then when you realize, well, you know what, I'm going to offer it what the house is really worth, not what they're asking for. So.
Yeah, I mean, the agents definitely have a range where they know the house will sell. They don't know, but they get a good indication from the pricing that we've seen in the statistics, where the house will sell. And what we're seeing is some going a little higher because there's a shortage of inventory. How we correct that is to get more inventory on the market. That is the best way to help our buyers out there. And if you're in the market to sell, it's a great time for you to sell. So please share that message with anybody out there. Let us send you the statistics. Come in and talk with Brian as to what you can afford to pay. And you want to make sure you don't overpay for a property. And the best answer to that, again, is to go to an area where there's more listings. One of the area that's not hurting right now, has plenty of listings to look for, is north west, actually central Minnesota, like up by St. Cloud. Plenty of listings up there. So I don't know if you want to go do a loan up there or not. And I do kind of have a lake place out that way, so I could show property out that way, but not the whole state is in this situation, just really the Twin Cities. And of course there's pockets of the Twin Cities where it's even more critical than others. Now, again, if you're above that 250 price range, you're in a normal market. So that means if you're selling because you're in that price range and you get all those multiple offers, you're in a good position to be a move-up buyer and go into the price range where there's not that much competition, and you can put in just a regular offer. So it shouldn't scare people away from saying, well, I don't know if I would want to sell right now because what would there be to buy? Well, most times people buy up a little bit, so it's probably going to be a perfect fit. And so I'm hoping that people come towards you, Brian, and get qualified to see what their move-up purchase could be, get their home on the market for those first-time home buyers.
Absolutely right. Yeah.
Okay. Well, if there's anything else that you want to share, we will be here again next Wednesday. I think that is going to be the 20th at 3:30 to about 3:45. And then I will get the joyous airplane right out to Seattle after that show. And I'm training with some agents out there too. We have an affiliate office out there. So we'll just do another show next week, and we hope that we have more people tapping in. It seemed like our broadcast worked today, so we're pretty excited about that. And please, as always, email us. I'll give my web email address real quick, and then Brian, I'll have you give yours and you can sign off. But mine is Knudson at themlsonline.com. And thank you for coming to the show. Brian, I'll give you the last words.
All right, thank you. And people want to get a hold of me, they can go online to, I've got a nice URL. It's called closewithbrian.com. You can go right to the website there and click on a lot of different features and whatnot. Otherwise, my email address is bnelson@muihomeloans.com. Thank you all for joining us today, and you have a great week.
Thanks.